They tax everything.
No, legitimately.
For real. South Dakota, New Mexico.
It's an excise tax, and it's imposed on all sales of services and property.
All right, so today we're going to talk a little bit about some of the specific client experiences that we've been involved in. More specifically, some of the value that we've brought to a company as we begin discussions with them, and then go through a whole process of consulting and asking questions. Certainly, plenty of discovery with these particular companies, and then talking about some of the services. And not just the service itself, but really like what happened throughout that process and some of the outcomes, right? And of course, solutions that were provided throughout that process. So who wants to go first? I want to hear from each of you.
Well, let me just start by saying that's a really cool hat.
Thank you. Thank you.
Very cool.
Yours isn't too bad either.
Paul, you want me to start or you want to start?
I feel like you naturally always start, so I'm like, I naturally just follow your lead. You know what I'm saying?
Okay. Well, I'm probably going to share a story that could be applied to lots of companies, but this particular company we started working with probably over 5 years ago now, would be my guess. But This is a nutritional supplement company based out of Southern California. It's a family-owned business. They started in 1980. And when you think about businesses in the 80s, 90s, or the last century, way back in the 1900s, it was a lot of brick and mortar, a lot of word of mouth, the marketing aspect. It was difficult to get a reach further outside of your state or outside of your region, or whatever the case may be. But then you have .com bubble and e-commerce, and then you have an opportunity for that to start expanding your reach and opportunity. And this company grew within that period. And then you get to Wayfair in 2018, and companies like this get blindsided with this sudden understanding of a tax responsibility that they didn't know they had. Right. So you've heard us talk lots of times about the fact that pre-Wayfair, it was about where you conducted your business, where your business operations were located. And post-Wayfair, it's all about where your customers are located. So if you moved into e-commerce as a retailer in the .com bubble, and then you moved into the Wayfair era, you're startled by what your responsibilities are. So anyway, we this company was referred to us because they were struggling with trying to understand what their footprint was, what their responsibilities were, and what they should do. They had done some work already with one of the automation providers out there. They had gotten some advice. They were already purchasing some software to help automate the transactions, but they weren't compliant across the board. And so they were trying to figure out what their responsibilities were across the U.S. and Canada and elsewhere. And so we were just able to come in and do what we call is a nexus risk analysis to kind of see what their footprint was, what their responsibilities might be, what their exposure could be. Ultimately, with our participation, what we really appreciate is we save them millions of dollars in mitigating liability, exposure in situations, and help them get compliant across the U.S. Probably, and that's great. We help companies do that on a consistent basis, but companies sometimes, if they haven't looked into this and figured this out, what their sales tax responsibility is, they could have exposure upwards of millions of dollars, right? 7-figure,
easily.
8-figure exposure. And that can be difficult to manage. Well, they're compliant across the board. We help them do that. We save them millions of dollars in the process of doing that, which we always appreciate the opportunity to do that. But the ongoing relationship has proven to help them from a financial standpoint. Obviously, you have greater peace of mind. This is a company that's continuing to expand and grow. They do all sorts of research and development to really drive an incredible product and a whole slew of products. But in the process of doing that, what they don't want to deal with on a consistent basis is sales tax compliance.
Sales tax.
So being able to take that off their plate and them not worry about that and gain confidence in that is really helped them pursue expanding their business. And what I mean by that is you build confidence as you continue to collaborate on the best approach. So just take, for example, they're on an automated tax calculation software. That software, they're running transactions through that software. Naturally, that software is going to cost you on a consistent basis. On an annual basis, it could cost you hundreds of thousands of dollars.
Yeah.
But what if you learn this? What if you learn that the platform that you sell on has a tax calc engine that can manage the sales of your products perfectly, and you have a solution to manage the returns through the sales tax people? Do you need that software? Do you need the transactions that are running through your shopping cart and has a tax engine to also run through another automation solution? Well, you don't.
Let's put it this way. What you need more than that is the $100,000 that you're spending on it.
Exactly. Yes, I would much prefer that. Well, here's the thing. What if you figure that out and you get that situated so you're no longer purchasing hundreds of thousands of dollars in automation software? But what if you find out that you have a legacy platform, ERP, that is not running through your system, but it's because it's for all of your wholesale sales, meaning there's no sales tax implication on these sales because it's inventory you're buying for resale.
Right.
So imagine if you're running all of those wholesale sales, which have no tax implication, through that same automation software.
Whew.
The automation software provider is not letting you know, hey, you consistently have zero tax due on all of these transactions that are running through the software. Ultimately, what we were able to do is just drop that software, right?
Because the software is still going to charge for all the transactions that flow through there.
100%.
What businesses don't realize is even though the software is determining that a tax rate of 0% is due on this transaction, it still is considered a calc, and therefore you're being billed per calc.
And listen, here's the beauty. It's perfect rooftop accuracy.
Oh, yeah, it's amazing.
Here's where the transaction occurred.
Right there.
$0 due.
We got this rate spot on.
Now, obviously, we're going to have to charge you for calculating that transaction.
100%.
$0 due.
And 95+% of the transactions fall into that bucket. So they are $0.
100%. 100%. So anyway, we were able to just continue to advise them on even the tech stack that they're using to be accurate in their sales transactions. What's beautiful about that is you might save someone $100,000 by moving them off of a calculation software that's calculating $0 on a consistent basis in that year.
Yeah.
But what you're saving them year after year is that $100,000 plus the 5 or 10% price increase that they're going to get year after year on those same transactions,
100%.
right? So this is something that we see consistently. It's not just a matter of this one client, but we have a great relationship with this client. We've had the opportunity to help them get compliant, stay compliant, but also continue to save money on tools and resources they need to properly run their company when it comes to sales tax.
Yeah.
Yeah, and we're talking a lot of dollars here, of course. Like we legitimately saved them millions of dollars through that initial process. And it's easy to look at, price out solutions, you could say, in sales tax in particular, and try to do an apples to apples comparison of like, so often people go to what am I going to pay for this return versus what am I going to pay per return over here?
Right.
And that's oftentimes the conversation that companies are having internally is like, how much am I going to pay per return? What's this going to cost me per year? Well, it goes without saying, or it goes at least, saying this after this discussion that we've just had here, that the human element of it, and not just the human element of like having conversations, but the experience and the expertise that was a part of that discussion ultimately for this client was invaluable, right?
Yeah.
And one of the things that is highlighted in my mind, even as you talked about going through that process of determining where they have nexus and then looking at their exposure, which was in the millions of dollars, is we didn't just hand over a nice, pretty report to them and say, here is, your nexus and risk analysis report. It was call after call after call over really it was at least a month, I think, that we had multiple calls a couple times a week where we were just hashing through the details and having conversations in a consultative way, of course, that really helped them have every single piece of evidence and information in front of them to then make executive decisions. And for them, some of the most important business decisions they've ever made as a company. And that's not just hyperbole, right? If they were sitting here, they would, say the same thing, that it really made such a huge difference with everything they built up to that point. And then for sure, from that point forward, having those millions of dollars that they didn't have to just pay out of pocket is a huge difference to their company.
One of the things I really like about this client is the fact that, they understood the tax responsibility. They had an idea of what the tax liability was. And then based off of their own risk tolerance, they were able to decide. Whereas you hear other stories from clients where they come and it's like, hey, I have this huge liability. And I was told this is the only way I have to do it. So being a business owner, being able to talk with mom and dad in this situation and be like, hey, mom, and hey, dad, your business is really great. It's really successful, but you have this huge liability. Here's from the letter of the law. Here's what you're required to do. Here's what you see in practice on an everyday basis. And here are some options to consider. Here are the pros and here are the cons. And then based off of your own materiality and your own risk tolerance thresholds, what do you want to do in this scenario? And so more so of, hey, we're able to save you however many millions of dollars, more so it's the education that comes behind and the understanding of, well, why do I have this responsibility and who gave me that responsibility? And well, why is that my liability and not this my liability? Well, based on what you sell here, it's not taxable, but what you sell here, it is taxable in this state, type of a thing. And so having the understanding and the knowledge and then being able to make the decision as a business owner, I mean, that's really what it comes down to. You run your own cost benefit analysis, you have your own risk tolerances, and you can choose what you want to do versus what you don't.
That's the beauty of the consultative human element, right? I think it's important for us to state we're not anti-automation. We're not anti-software.
No,
we
it's
use
good.
software to run these nexus risk analyses. We use automation software to prepare and file returns for our clients.
Oh, no doubt.
We were definitely wanting people to utilize tax calculation software. That's going to be the easiest approach to making sure that you're collecting the right rate on the right taxability of the items that you sell in the right locations, right? But the human element, the consultative approach to being able to talk through the results, right? The nexus risk analysis and the results of that have a large number on them. So you could just set that in front of them and say, well, this is what you have to deal with. Or you could actually, to your point, have several conversations, talking through it, walking through it, understanding the remedies that are available, what the approach is that you can take, what the practical approach might be, what your risk tolerance is, what the materiality might be for your organization, what this means for the family, what this means for your customers, what it means for the organization as a whole.
In this case,
being able to have those conversations.
They also had, multiple children involved in the business that they're, going to pass this on to. So wanting to make sure that whether it's merger or acquisition, or you're just selling a business to get out of it, or you're passing it on to the next generation, you want to make sure that it's orderly and you're in compliance, you're in the right mindset from a business perspective to make sure you're not handing off some ticking time bomb, waiting for the state of Florida to come audit and collect their millions of dollars that you failed to pay them.
I like to say truth.
Hashtag truth.
That's exactly right. I just think it's important to recognize that any sales tax system that you want to help have peace of mind from or through includes platform and people.
Yeah.
Right?
Yeah.
That's just any successful business is platform and people.
Yeah.
It's systems and processes, but most importantly, it's people. Right?
Yeah.
It's an important aspect of success in any business or organization, but especially in the sales tax system. We say all the time, with automation and software out there, you can set it and forget it, but you're likely going to regret it, right? Because you don't have human oversight just to ensure.
Forgot.
It's no different than AI, right?
Oh, no,
AI is phenomenal,
Yes.
and it can do phenomenal things. But if you just ask it to do something, and whatever the product is, you use that without human oversight, review, making sure that it's accurate based on what went into it and what it spit out, you can run into some serious situations if you don't have that human oversight.
It's nice to see the market in general realizing that, being aware of that, and in fact appreciating that. Because if you look some of even like our competitors in the sales tax solution space, the ones that are doing the best job right now and actually capturing more market share are the ones that have a good combination of technology, the tools, and then the consulting, right? There's people that actually genuinely care about helping companies handle the sales tax, and humans that do, help you through that process.
Yeah.
And naturally, some better than others, but
I don't even consider them competitors. I consider them friends in the market.
Exactly.
Right. From an abundance mentality, what we really want is people to truly find peace of mind when it comes to this issue, sales tax. We're not always going to be the perfect answer for somebody. But what we do like to say is we love to be your first, second opinion.
Yes.
This is true.
Because if you've gotten advice, maybe you've been to the doctor and he told you you've got a serious situation, you might just want to go talk to somebody else and understand, do I have that serious situation?
Yeah.
And what's your recommendation on remedy to that situation?
Right.
It's the remedy sometimes and the approach to attack a serious situation that can differ from organization to organization. So we like to offer second opinions on whatever encouragement you've received in the marketplace.
No doubt.
Well, and like we all know, I mean, oftentimes we all live in our own world in the sense of, our perspective just shapes our reality.
Yes.
Right. And that's very true in any space, whether it's, the medical space and our health, or, as we're talking about here, like sales tax, where it helps to even just have someone talk to someone that has a different perspective on the issue that you're having or the questions that you have, and provide, just some different information and different perspective for you to consider.
Yeah.
Oftentimes it's not so kind of woo woo as that might have sounded. It really is like facts. Like here's the fact. And here's some other facts, right? More than one thing can be true.
Right.
And so it is so important to like get some different opinions.
It just reminds me of our
but we can get down on some woo-woo too.
Oh, we're all for that.
We're big woo-wooers.
You hang out with me long enough, you'll get plenty of that, right?
It just reminds me of one of our core values of that is collaboration builds confidence. I mean, we preach about that all the time in the firm of, hey, before we respond or before we want to do this, let's just collaborate a little bit, make sure that we're getting all of our heads together. And so no different internally than it is externally as a business owner. I mean, you don't know all the things. Just face it, right? I mean, you have your strengths, but you're not going to know all the answers. And so as you collaborate with different, business coaches, advisors, financial, marketing, sales, whatever it may be, collaboration builds a lot of confidence. And so we like to collaborate, and we like to provide a lot of confidence and peace of mind.
We also like to talk a lot. And I would love to hear another client story.
I have a good one. Paul hit something that creates a really good segue in this, and he talked about M&A, right?
Yeah.
And this particular client that we were just talking about here is something that highlights one of the things that I love about our group and our 30 plus year experience is that we've helped so many different types of companies, both, industry based, right? Just people ask like, what industries you work in? All of them, right? We naturally can like dial in on some that, are better than others. But as far as the different types of companies, you have a family company that was just family shop and turned into really a big company, but still
Juggernaut.
family
Yeah.
owned.
Yep.
And then one of the examples that I wanted to hit on today is actually a company that started out very small like that. And, you know, the founders were very much just one of these that's like, here's a problem, and it's a big problem, and no one's really addressed it. And that's part of what helped their company become a very successful company. Well, along the way, I actually had folks that I know very closely that got involved in that company. And, you know, I've been in this space now 10 years. And so like through that time, as this company was growing, and I would have conversations with people on the inside of this company at the executive level of like, how you dealing with your sales tax, right? One of our favorite questions. How do you manage sales tax?
Is it keeping you up at night?
And there, yeah, I didn't ask him that one. And you'll see from the story, apparently it wasn't keeping them up enough at night.
Yeah.
Because then they had plenty of sleepless nights when things, you know, came to the point that they did when they finally involved us. And what that was, cutting to the chase, they were ready to be acquired. They had a private equity group coming in to buy them. This is a sizable PE group that had one of the, you know, a Big 10, you could say, doing the, it was probably actually a Big 4, if I remember right, doing the due diligence. And did sales tax come up? Absolutely, it came up.
Yep.
But
Probably
even with
in the 11th hour.
well, it came up in the due diligence, and this was one of the things that was baffling to me. There was enough there to be like there's some significant exposure here with sales tax. But even with that big company, you know, the advisory firm, it's still, nobody was like saying, hold on a second, let's like figure this out. What really happened was literally the day before they were going to sign this deal,
the 11th hour,
there was a letter from Washington State,
Got
the
'em.
Department of Revenue.
Got him.
So finally, my connection there.
Whistleblower?
No, there wasn't a whistleblower that I know of.
Missed opportunity.
Yeah, it was exactly. So I missed out on some commission, but yeah, they ended up finally like calling me and saying, hold on a second. Like, what can we do here? Like, well, we're going to need to have a conversation, like dig into, you know, the risk analysis that was done for you guys. And as we started diving in, you know, there was the short version of the story is that we went in, and even just looking at the work that was already done, we could see there was north, you know, again, a 7-figure exposure there, right? We also saw like $250,000 of consulting and advisory fees that were being proposed to handle the situation. And we look at that and it's like, yeah, we could do it for less than half of that. You know, like we can do it for a fraction of that. So that was one of the things that the client loved from the get-go is like, look, we're not just kind of throwing this out there and saying we're going to charge you, you know, $500 an hour for this level of service and, you know, down to $150, you know, if this person's working on this. It was like, no, look, here's the full scope of what you guys need. Right. And here's a flat fee to handle that for you.
Yeah.
And that was, of course, very important to them because they absolutely knew they needed to clean it up at that point. Yeah. So it's like, okay, there's, you know, win number one for them is this going to cost us a fraction of what it would have otherwise to actually clean this up. And then we started like pinpointing with our team of experts that have, you know, so much experience with the states and just being in the details, you know, day in and day out. We started looking at it and saying like, we're going to be able to, you know, shave some exposure off of this. And, you know, what happened, as, you know, does frequently happen with these transactions, is they end up closing the deal and just put some money in escrow.
Yeah.
Right. And said, okay, sellers, this, whatever, you know, dollar doesn't get spent on cleaning this mess up, like you get it. So again, like that's real money that these sellers have on the table
for sure.
If they can, you know, figure this out and take the best approach. So it's very different, right, than the example we were given previously of like, okay, what are we going to do moving forward? This was one of like, we got to go clean this up. So now let's mitigate and let's minimize the actual exposure. And
Yeah.
what ended up happening is, again, it was a 7-figure exposure. Part of it was beautiful timing, and the biggest part was absolutely our team just going to work and doing what they do best and dealing with the states, right?
Yeah.
Voluntary disclosure agreements. The fortunate side of that was, I think it was the state of Texas happened to have an amnesty during that period, and it was like beautiful. We go, but again, you have to go through the steps to actually prove that you qualify, to go through that program and be a part of that process. And when it came down to it, right, we worked through this for several months, of course, and this company ended up saving close to, if not just north of $500,000.
Nice.
Right. So, which again, wasn't about just this big company of like, oh, thanks for the money. It was individuals that had just built a company. As any entrepreneur knows how much, blood, sweat, and tears and sleepless nights go into that. So at that point, right, like it wasn't just like, here's a few more dollars. It was a significant amount of money that ended up in their pocket. Yeah,
because I think anytime you're using advisors on the buyer side and they look at your due diligence situation, then they're going to say, you know what, we believe this will cost $1.5 million.
Yeah.
And we should do it.
Yeah.
Right? And then you have that large fee that's associated with that, that's held in escrow as well, right?
Well, the buyers are trying to protect themselves too, because they don't want to be stuck with the liability.
100%.
And it's unknown, exactly what that liability is. So we're just going to estimate it could be from here, it could be to here. And so because it could be upwards of 1.5, we're going to go ahead and hold 1.5 in reserve. And then any excess that goes unpaid or doesn't need to be paid or is not due, we'll just kick that back.
And then the seller should get a second opinion. on what that actually looks like,
which they did.
Get them.
The state of Washington forced them to get a second opinion, but nonetheless, they got it. And actually, when you talk about that example, and what you mentioned of, say, it's like 1.5 million, I said they saved 500,000. That was actually shaving the true liability that was on the table.
Yes.
Right. So they actually saved a lot closer to $1 million when you consider the amount they saved in fees that they didn't have to pay for the services, and then shave off what was an escrow based on the buyer's due diligence.
Yeah, you're exactly right, because the $1.5 million estimated escrow is like the worst case scenario plus all the fees to manage it, right?
Yeah.
When you actually look at what the liability is, if I remember this situation correctly, the liability was closer to $1 million.
Correct.
Right. It wasn't the 1.5, and it wasn't going to cost $500,000 to do the work. But when we got involved, it was around $1 million, maybe a little more than $1 million. But at the end of the day, once everything was taken care of with fees associated, I believe they were able to claw back about $1 million in that escrow.
If you think about how many of those scenarios come up, even when it is dealt with before the 11th hour of like the due diligence work happens, again, typically on the buyer side, and then the seller could look at it and be like, okay, here's, the $1.5 million, and they just pay that out, which sometimes seems insignificant because if it's a $50 million deal, right? But,
drop in a bucket.
Sure.
But again, you're talking about real dollars. In this case, the sellers legitimately saved or made close to $1 million more on that deal than they would have otherwise.
That's crazy.
I'm actually, my mind's blown right now even thinking about it, because I don't think I've ever thought about it in that light.
Yeah.
So
yeah. That's beautiful.
What should have been a cost or an expense ended up being money back in their pocket.
Yep.
Which is huge.
Paul, I don't know how you're going to top that.
Well, I have a story for you today, because this is the most tragic when it comes to accounting firms. So we do a lot of partnerships, right, with CPA firms, accounting firms, financial firms.
Good people.
Great people doing great work for great clients with great people, 100%.
They may not have a lot of sales tax experience.
In this case, the accounting firm doesn't have a lot of sales tax experience outside their home state, which most don't. They're based in California. They know California legislation, but they don't know Nevada legislation, and they don't know Washington legislation. It's just surrounding states even. But this accounting firm was helping this this California-based business with their sales tax and doing all their accounting work. And naturally, they saw, because they entered into the e-commerce space like a lot of businesses did, they saw a lot of growth. And the agreement with the accounting firm was, we'll manage the sales tax practice. We'll turn your tax on when you hit the thresholds. We'll get you registered. We'll start filing the returns. We'll get that tax remitted. Well, unfortunately, there was a break in the chain, and the tax got turned on, and they didn't get registered, and they didn't report the tax. Tragic. They turned the tax on in some states. They didn't turn the tax on in other states, and it just ended up in a real mess.
Legal terms always sound worse than they are, and they always make you sound guilty, even when it's innocent. Right. What the states call that is unjust enrichment.
Yes.
And they consider it a fraudulent activity.
Terrible.
Okay.
Nobody wants to end up in an orange jumpsuit because they collected tax and failed to remit it.
Yeah.
But in this case, when you have an accounting firm that's managing your finances, doing all of your federal and state income tax, they're doing your bookkeeping, all of it. You trust that this accountant is just, they're on top of it.
Yep.
Well, you guys do accounting. You know sales tax. Well, no, we don't really know sales tax. I mean, we know California because that's where we are and that's where we live. But I mean, sales tax differs in all these other states, and we don't have the expertise. So the accounting firm encouraged them to reach out to us. They reached out to us. We did an advisement for them, a free consultation, just jumped on the call, walked through it with them to understand, where they were, what their liability or responsibility was. And then to help them understand, okay, based on your responsibility, here is the liability we got to deal with, and how are we going to tackle that? And so now they're going through a big legal battle with the accounting firm to try and get that tax back. But the bottom line is that they understand and are now educated on the responsibility. They've figured out, okay, this is our liability in the millions, and then what are the pros and cons of tackling that? And so we helped them pursue a number of voluntary disclosure agreements. We were also able, uniquely enough, to obtain a voluntary disclosure agreement in states where they got registered. Because one of the decisions that was made was, hey, we're going to register currently and go forward. Well, once you register, it's typical that the state won't allow you to do a voluntary disclosure agreement. In this instance, because the tax liability was prior to that registration date, we were able to enter into an agreement that that covered the period prior to when they got registered.
I just want to note that's unusual.
Which is very unusual, very unique, similar to Danny's story of finding the amnesty program that was available. You happen to come across this, and based on our experience,
it's a no if you don't ask.
100% will always be no.
So you might as well ask.
Might as well.
Why did they decide to go VDA in those states because I imagine there was some discussion up to that point when they said we're going to just register prospectively. They ended up doing that.
Well, the accounting firm didn't have that consultative approach. They just, you triggered the threshold, let's register, let's go on.
I gotcha.
And it was missed. But
which actually is very common.
Oh, for sure.
Not all nexus reviews are created equal, right? Oftentimes what you're going to see of whether it's a sales tax tool and you plug in your historical data, or it's even like an advisory firm, oftentimes they'll say, yeah, we'll do the nexus review for you for free.
Right.
But usually what that means is they're just checking the box, yes or no.
Right.
Yes, you have nexus, or no, you have nexus. And
right.
That's probably what happened in that circumstance, where it's like, we have nexus or you have nexus, go get registered, without asking enough questions of, do you have some historical responsibility?
Right.
We got to give a plug right here for our friend Taxability too, because that's a very frequent one
time.
Of, you have nexus. And even if they look at, past exposure, is the past exposure number correct? If you don't look at taxability, more often than not, it's not correct unless you happen to just be selling widgets across the U.S. that are assumed to be taxable.
Easy peasy.
Shout out taxability.
Taxability for sure.
I mean, if you're looking at friends, he's one of your biggest friends, and he's a big deal.
Yeah.
No doubt about it.
But after you look at taxability, you can't forget, how you're selling your product or who you're selling your product to. Like PAR's example, they were selling dietary supplements, but they were also wholesaling dietary supplements. So dietary supplements aren't going to be taxable in every state. And because you're doing wholesale, it's not going to be taxable if you're collecting those exemption certificates. So it's low-hanging fruit for the auditor. You can't just assume that they're exempt. You gotta collect the certificate from them and hold on to that for an audit.
Yeah.
But yeah, how you sell your product and who you sell it to. Maybe you're selling through a marketplace facilitator, which I believe they were selling through a marketplace facilitator. So some of that tax liability was shifted from the seller directly to the facilitator, which also helped mitigate some of that liability. But if you didn't check all those boxes and go through all those steps, it's very easy just to.
So you're just suggesting that collaboration is a key aspect of.
Hey, collaboration builds confidence here. Collaboration builds confidence.
Decisions you're making when it comes to sales tax. So just going back to your example, that client, we were able to help them participate in voluntary disclosure programs.
Yeah, a lot of voluntary disclosure programs was best for them because they had established Nexus so long ago. And so voluntary disclosure allowed them to limit the look back period. So the state forfeits their right if you complete the voluntary disclosure program correctly and you do it 100% voluntarily and you 100% disclose everything.
And that allowed them to pay the taxes that they had collected but did not remit.
Yeah.
It allows them to do that without penalty.
In most states, but tax collected not remitted is still frowned upon. And so
100%.
Even in a voluntary disclosure agreement, the states will still impose a little bit of penalty, but it's a much reduced
but not a fraud penalty.
And you're definitely escaping fraud.
Stay out of jail.
Okay.
And you're getting out of that
So you
orange
stay out of
jumpsuit.
jail. And then what you were saying at the beginning of this is they're now suing was it a CPA firm, a law firm?
Yeah, it's a CPA firm, an accounting firm that they're now going to pursue legal action because of all this liability that they're having to pay out of their own pocket with penalty and interest, that's just tragic.
Yeah,
it's just tragic. And it's no different than you go to, you were talking about the sell of your business. You had worked so long to build this business, to generate a lot of revenue, so on and so forth. And then you go to sell it to, ride off in the golden parachute, enjoy your vacation or your retirement rather on the beach, only to find out that your golden parachute's full of holes and it's got this significant liability. Oh, it's just
gold plated. It's not actually made of gold.
Right, exactly.
Well, you brought up something that I think is important. We're doing client stories here, but I just want to remind everybody that to try to really understand what your sales tax responsibility is, we just came up with 3 qualifiers. You need to know where you sell your product or service.
Yep.
What you sell, that's where we bring in our friend taxability, and how you sell it. That's where we bring in what format you might be selling it, whether it's on a marketplace, facilitator, platform. So if just answering those 3 quick questions, we can provide a lot of insight in these second opinion type scenarios where we can understand where you sell, what you sell, and how you sell it. And we can help you identify pretty quickly and gain a lot of confidence really quickly on whether you have a sales tax responsibility or you potentially have some exposure out there. And then consultatively discuss the remedies to try to get compliant and stay compliant.
The true strategies behind how do you tackle that and how do you deal with that in the least disruptive way possible.
Yeah.
Nobody wants to be audited. Nobody wants to raise the red flag. Hey, state, I'm over here doing this. Nobody wants to get whistleblowed on type of a thing. You just don't know. And so you take the good with the bad. Here are the pros. Here are the cons. Here's an idea. Here's an idea. And here's an idea. What rings true to you? Here's what we see in practice. And then just take a real consultative approach to it.
Honestly, what I want when I'm in a rough patch, a tough situation, is Paul just talking me through it. He's got that calming influence and he can just walk you through it. It can be real bad. It can look real
horrible.
And you can feel pretty okay at the end of Paul just talking you through it.
Listen, collaboration builds confidence. We provide peace of mind all day long, and there is not a number that's like we haven't seen at this point. You know, being in the business for 30 plus years. I mean, I've been doing it for 18 now. It's just like, yeah, I mean, it doesn't matter what you're selling or who you're selling it to or where you're selling it. We've seen it at this point. And so being able to take just a very calm and collective approach to it of, okay, this is what it is. It doesn't matter how or why we got to where we are today, but how are we just going to tackle this and resolve that? And let's consider the options.
And I'm not sure I need to provide this level of clarity, maybe not. But when we're talking about exposure and we say someone had a 7-figure exposure, we're not talking about sales volume. We're talking about actual
tax
estimated calculated tax that should have been collected and wasn't.
Yeah.
Or was collected and not remitted.
Yeah.
That's the two biggest scenarios that we see.
Yeah, and even adding a layer of clarity to that exposure number is if the state contacted you and they wanted to be your friend, at that point, it's going to be an expensive friendship.
Their best friend is taxability.
Yes.
I mean, we have a good relationship with taxability, but that's the state's best friend. Really, I'll just say it because Paul would normally say it.
Here it is.
Sales tax laws don't make sense.
They don't make sense.
That's because they're supposed to make dollars. Right.
And the states they're strategic. They're witty. They're trying to figure out how to make more dollars. Now it may take them a decade to pass a new legislation to put it into place, but they're going to get there.
Yeah,
they'll get there.
100%. Yeah.
Yeah. By the time they do it, the dollars are worth a different amount than they were, 10 years prior.
Yeah.
Okay, Paul. Speaking of the therapy and the joy that your voice brings, I want you to wrap this one by saying, "Stay classy, San Diego."
That phrase sounds really familiar, "Stay classy, San Diego," but I'm not familiar with where it comes from.
Just say it.
Just outright, "Stay classy, San Diego." It's beautiful.
Money.
Well, that was very natural and flowy.